You might have heard that investing stat where 90% of people who invest or trade end up losing money in the stock market. I truly believe that if you follow these 10 principles that I'm going to mention here, you can significantly set your chances up for success within the markets. Now, ladies and gents, with all that being said, let's dive into the first rule, and this is by picking out a proper investment strategy and to stick with it. Now, there's a popular quote that I love, and the saying goes like this: by failing to prepare, you are preparing to fail. When it comes to investing into the stock market, let me tell you, there's a ton of different strategies that you can experiment with. This could be from day trading to swing trading to playing options, or even just trying to simply go on Wall Street bets, see what's the most upvoted, and then dumping your hard-earned money into a meme stock that eventually crumbles. Regardless, whichever strategy appeals to you the most, pick one that fits your investing profile and stick with it consistently. Now, I personally prefer being a long-term investor, and if you are too, then here are 4 more things that you can do. Within the umbrella, there's value investing, growth investing, income investing, and there's also dollar cost averaging. With value investing, this follows Warren Buffett's strategy where you find stocks that you believe are intrinsically undervalued. When it comes to growth investing, you can build capital through buying equities that have the potential to increase in value or also grow in value in different sectors such as emerging markets, tech, which was a huge one, energy, aerospace, and more. Now, income investing is another strategy that you can also commit to, and this is also known as dividend investing, where you focus solely on generating income from your investments. This can be dividend stocks, bonds, or anything that ends up paying you consistently month over month. Now, when it comes to dollar cost averaging, this is simply where you just buy in smaller amounts at regular intervals, regardless of the price. Now, the reason why I wanted to tell you guys those 4 different methods is because some people just end up having one flavor one week, and then next week they end up changing it up. If you're an individual who's trying to commit to being a dividend investor, or you want to dollar cost average just all the time, commit to it. Don't go from dollar cost averaging one week, having a small portion, and then ultimately just going all in into some of these growth stocks. Regardless, there's plenty of strategies out there for you to check out. There's even technical analysis and more, but whatever you decide to go with, make sure to learn it inside and out and stick to your own strategy and plan. Now, the second golden rule that you need to know about is to make sure that you at least have a plan for every single trade that you make. At this point, if you've decided upon what strategy you want to follow, you want to make sure that you take the time to make sure each trade you make has a certain objective to fulfill. So ask yourself harder questions. What's your profit target? What's your stop loss? How much lower can a certain stock go before you're going to sell out, or are you going to hold through it for many, many years? These questions here are so crucial because they prevent you from selling your winning investments too early or selling your losers too late. Now, I've seen traders sell their investment after a 5% gain, but they then hold their bags where the investment goes down 25 to even 40%. Now, depending on what your time horizon for certain investments would look like, I've seen investors who end up going up 200 to 300% with certain stocks, and they get married to it and they never end up selling before it ends up coming back down. If you want to be a disciplined and successful investor, just stick with the fundamental rule of knowing how much money you're going to be good with. Do you want to make $10,000 on a specific stock? Can you hold it for 3 to 5 years? If it goes down, are you going to sell it? Make sure that you have these answered before going into any type of trade so you do not panic sell off of just emotions. So as an example, if you bought a stock at $15 and you set a price target of $25, you could consider taking profits at the $20 and $22 mark before then closing out the rest of your position at $25. This here is just another approach and strategy where you can minimize your risk and help ensure that you end up profitable without selling all too soon or without selling all too late. On top of that, you want to make sure that the profit to loss ratio you set up is positive. So what is this, Brian? This is just the risk versus reward ratio, and this is often overlooked by a lot of newer traders and investors, but it is something that you want to definitely make sure you consider before buying into any type of stock. So to give you guys a real example of this, if we were to go off of the numbers that I mentioned earlier, where you're buying an asset at $15 with a price target of $25, and say you had a stop loss at $10, the potential profit is $10, the potential loss is $5. So 10 divided by 5 as a fraction is 2 to 1. This means here that the trade has 2 times more profit potential than it does with risk. And this is critical because with the 2 to 1 profit loss ratio, you can afford to be wrong about 33% of your trades and still be breaking even. Now that you've picked a strategy and you've learned how to plan out your trades, this here follows the 3rd golden rule, and it's using a paper trading simulator. So paper trading pretty much allows you to gauge gain experience within the stock market without having to risk any of your money up front. At the same time too, you're not going to be gaining any money, so this is solely for training purposes. Looking back, I wish I did paper trading way more often. I would have saved myself more money and I would have learned a lot more lessons, which I wouldn't have to learn the hard way throughout the past few years. I know investing can be quite intimidating, so you can actually go ahead and set up multiple different paper trading accounts. Now, this here lines up perfectly with one of our sponsors today, Moomoo, and they also give you an all-in-one trading platform that not only allows you to buy and sell stocks, but it also offers excellent analysis tools, up to 2,500 free investing courses, and many other beginners to advanced level friendly features. Following the third golden rule, they also offer you a hands-on paper trading feature, so you can test out any new trading strategy for yourself or even practice trading stocks without risking a single penny. Now, to check this out, all you have to do is go into the app and search paper in the search bar. Then you can start your paper trading with the real-time quotes.
Now, by the way, guys, instead of just getting 15 free stocks, Moomoo just came out with some breaking news to let you guys know that they'll be offering 20 free stocks for the month of May. So if you want 20 full free stocks, be sure to check out the links down below in the description.
Now, the fourth golden rule is to make sure that you're setting long-term realistic expectations and goals. Don't be one of those newer investors thinking that you can outperform the market by a significant amount, because there are many people a lot smarter than you and I who are on Wall Street, who are quant traders that have been doing this for a very long time, who are yet to still get a perfect track record. Look, simply put, investing in the stock market is a long-term game, and it's so important for you to have a clear understanding of your financial goals and what your time horizon is going to be. Investing in stocks is inherently volatile too, and there may be a lot of short-term fluctuations depending on how the economy is doing, what political events are going on, or any type of black swan event like the SVB crash that happened. Regardless of what it is, if you have a long-term goal, you can ride out a lot of these short-term fluctuations and allow your investment to potentially benefit from the historical tendency that the stock market has, which is producing positive returns over the long-term run. Not only that, but by setting up long-term goals, you're also going to be able to use the power of compound interest, where over time, if you continue to just reinvest dividends, capital gains, and even your own money, you'd be able to see your portfolio growing a significant amount over time. The fifth golden rule that is so essential is to make sure that you can diversify your portfolio. Now, diversification here is a key strategy for not only expanding how much money you can make within a certain market, but it also reduces your risk within any sectors. This means you can invest in a mix of different stocks or bonds or even any other assets you deem viable. Now, I can't even count the number of people that I know that have gone all in on a specific stock or a specific crypto, and ultimately it's these people who weren't able to diversify where they end up losing it all. Ladies and gents, diversify when you plan on investing. Don't just put your faith into one stock or one crypto, because at the end of the day, you never know what may happen to a certain company or an industry. Diversification is overall just going to smooth out the fluctuations in your portfolio's value, and during times where entire markets are going down, you might have that one stock that is able to negate those losses. Overall, ladies and gents, diversification is important for a few reasons. It gives you a well-rounded investment strategy. It helps you to reduce risk. It can also help you to increase potential returns, and not only that, but it provides you access to way more different investment opportunities because you are leveraged within other markets. For me, investing is simply as reducing the amount of risk versus going for as much return as I can. Rule number 6, if you do decide to invest more consistently and regularly. Now, I'll say I was on the other ladder of that, where back in the day, I first got into stock market investing. I would just invest whenever I felt like it. When I saw some news of something going up, I was like, okay, let me just toss in $100 or $200 into this stock here. But I realized just how unmethodical that was. If your goal is to build wealth over time, you want to consistently invest money throughout a compounding period. This means putting money into the markets on a regular basis, where you can potentially benefit from the long-term growth of the stock market. By investing a fixed amount of money on a regular basis, you're also going to be able to buy more shares when prices are low and fewer shares when prices are high. This here is also called dollar cost averaging, and it helps smooth out the impact impact market fluctuations on your overall portfolio. The only time I would say it's okay to invest spontaneously is if you see the markets crash completely and you've been waiting on the sideline with a boatload of cash to go in and buy up the dip. On the other hand of that, you truly never know how long the dip is going to last, and this is why the safest play is to continue investing at a regular interval. But at the same time, I myself have made a lot of money from being able to spot these dips, buying in at that time, and then waiting it out. For the most part though, I would say this segues well into rule number 7, where it is all about controlling your emotions. Now, investing in the stock market can be very emotional, and it's important to avoid making decisions based on how you feel with fear or with greed. By sticking to that long-term strategy that I just mentioned, you avoid a lot of the impulsive decisions, and it can also help you to stay on track towards whatever financial goals that you set out way earlier. Investing in stocks is also very, very special, especially when you're going through a bear market. So by controlling your emotions, you can also reduce the stress associated with investing, and you can make way more rational and informed decisions. Following that, we have golden rule number 8, which is reviewing all of your trades. Now, a lot of people will go into a trade, they'll make some money, they'll sell out, and then they just move on like nothing happened. Anytime you have a win or anytime you even have a loss, make sure you analyze what happened during that trade. What was your mindset? What were you thinking? And how long were you expecting to hold a certain position? Did you get the outcome that you expected? Did the outcome not pan out the way? Did you want more money? Were you content with this trade? Did everything go as the way that you had planned? Now, you guys can use the old school method, just paper and pen in a journal, or you can type it out on your computer, but there are also other apps such as TraderView where you can import your trades and it'll give you a full analysis on exactly how you felt about it. At the end of the day, it doesn't matter what platform you use, but go ahead, always review your trades and see whether or not there was a lesson to be learned or something that you could have done better. Rule number 9, don't try to outthink the market, and please do not get caught up in the past. Look, ladies and gents, I've been there, okay, where you do all the research in the world, you are so bullish about a certain stock or company, or you have a theory that the market is going to crash on this date because 10 other people are saying it is, and you are just so confident that it's going to happen too. Look, sometimes the markets just don't work out logically, and sometimes predictions just don't pan out. If you have lost money, just move on, learn from it, and don't think too much about how much money, you've taken an L from, but just know that you could always make even more money or your money back in the future by staying emotionless and by sticking with a strategy alongside the golden rules that I mentioned in this video. Going into rule number 10, this is very, very important, but join a community. Look, with the power of the internet, there is no excuse for you guys to not have any additional resource or people to talk to when it comes to investing into the market. There is such power in joining a good community, and I've also felt this firsthand. With a good community, you can have a wide range of information, research, you can get more additional insights about the stock market, you can ask other people their opinions on whether or not your own theory might be a little outlandish or whether or not you are making a decent decision or not. Not only that, but investing in the stock market, like I said, can be emotional, so having a community that can provide you emotional support and help you stay motivated during challenging times can be huge. So try to find someone who's successful in trading stocks. You can start with maybe your cousin or your uncle or just, a family member that you might know who's involved in it. And if you've exhausted all your options, you got no family, no friends, then go ahead and you guys can also check out a community that I'm building just for you. So I've gone ahead and built out one of the largest crypto communities in the previous bull run. I've gone ahead and I've quieted everything down so I can build out this brand new system for anyone to join. In the process of making this, we actually have a wait list that you guys can also check out down below in the description, where this is going to be a community for any other stock or crypto investors to make sure that you're informed, that you can learn from another, and you can also feel supported in walking towards whatever financial goal you have. On top of that, I'm going to be giving you guys the bear market price. It's going to be very, very cheap, like literally cheaper than a Netflix subscription. So while we're still building things out and while I prepare to make this one of the best communities possible in order for you guys to make more money, be sure to check out the link down below in the description. Now, even if you guys don't join my own community, that's completely okay. Just find some community, find a place where you can talk to it and you can get that support. Investing isn't easy. It's a long-term game. And if you have people who have done it, who have more experience, who can walk alongside you during the process, I believe that you can save a lot more money and even make more money in the future too. So thank you all so much again for watching this video. If you guys have not done so already, check out Moomoo, pick up your 15 free stocks. If you don't like the company for whatever reason, if you don't vibe with it, pull your stocks out of there, sell it, realize it for cash, because that's still free money for you guys. Thank you all so much again for watching. If you guys found any value, be sure to subscribe, like this video, and comment down below the secret keyword, and that's going to be Green Goblin. Comment down below Green Goblin and I'll see y'all soon. Peace out.